Hi, my name's Steve Torso, and I'd just like to say welcome to the next Venture and Capital interview. Today, I have the managing partner of Verge Tech Health Fund, Joseph Mocanu. Joseph, welcome.
Thanks, Steve. Thanks for having me here.
Now, look, obviously, we obviously come across you through WI, and sort of when I was listening to the sort of panel session just the other day on the sort of healthcare, I thought, look, it'd be great to sort of have a follow-up discussion, sort of understand a bit more about the fund, the companies that you're focused on, and also understanding that we communicate with a lot of investors. So for me, building the interest in the healthcare space is a high priority. And I love to, for me, one of the easiest ways to do that is to actually just interview experts in the area and understand where they're looking at. So as a start, love to kick off with a bit about your background and how the fund came about as a starting point.
Sure. So I've been a little bit lucky in that I've had an opportunity to wear a lot of hats during my rather short life. So I started as a programmer, as a scientist, an accidental medical device entrepreneur, a bit in private equity, a long time in management consulting. But what got me really into this was the fact that I was angel investing shortly after I moved to Singapore in 2014 with my old firm, Oliver Wyman, when they asked me to move to Asia to help start the healthcare practice. And, I was going from helping multinational pharma companies with their R&D, revenue, licensing, M&A strategies to here where it's, in my immediate backyard, I have 680 million people that don't have access to good healthcare. And in the broader community, almost 4 billion people that don't have this proper access. So our clients were basically asking, well, how do we enter these new markets? How do we expand access in these markets? And they were looking for partners on the ground to help them do this. And frankly, there weren't too many that could. However, we were meeting all these entrepreneurs who were trying to solve these problems that were existing at the ground level, and no one would invest in them because, they're too early, too slow, too regulated, too complicated, too technical. And I guess I was lucky enough to have the appropriate background to have the hubris of investing in these early entrepreneurs.
Yeah.
And it turned out that it actually worked for a bit. And then, after 13 angel investments, 9 of which were in healthcare technology, I realized the only reason I go to work every day is to basically feed these entrepreneurs. And that's not efficient. So, how do you make this full time? And that's where the fund and the idea for the fund formed. And a year and a half ago, we opened the doors, had a license, had the fund up and running, and started making investments.
But you must be sort of rare in that case, because I know we've spent a lot of time in Singapore, and obviously there's a lot of focus on deep tech. There's a lot of focus on sort of technology and sort of platform-based businesses. And I noticed in our first couple of years, it wasn't up until I think it was like the 4th or 5th year where someone first mentioned life science to us. And I was really surprised. I thought to myself, it's interesting that there's so much potential opportunity there, but it really isn't sort of spoken about as much as what it could be.
No, it's true. And the reason being, I guess there are several reasons. Number one, it is actually hard to understand. It's a little bit of a hairy field if you haven't been doing it for most of your life. It's exciting because, the next frontiers, the next cures, the next treatments, they're going to come from here. But there's also a bit of a disconnect in that a lot of the life sciences innovations are really tiered towards first world markets where the affordability is quite high. Or let's say you're developing a new drug, you can expect to command like $100,000 a year for a course of treatment, or a brand new medical device, an implant that would cost, say, $50,000. That might give a 30% increase in durability versus what's on the market today. And that's been the focus of a lot of the life sciences innovation in Singapore and frankly around the world. But to have something that is applicable to the broader markets in the region and have it be life sciences is not mutually exclusive. You just need to look at the right problems and think of a way to actually solve them using the tools you have at your disposal. And the fact that you can do a lot of massive data gathering, the fact that you can make inexpensive medical devices that have relatively few components, and then, how shall I say, kind of outsource the processing to probably the most advanced computers that we have in our generation that are sitting in our pockets offer a lot of opportunities.
Yeah.
So I don't think they're mutually exclusive at all. And it's the latter that we personally, in our fund tend to look for.
And I was going to say, the other thing I'll just note is that what I also do love about Singapore is that obviously a lot of the investment into life science, it can sort of be often led by sort of government, sort of government connected entities. But I imagine for you, when you first started, you probably have a strong source of deal flow, just given that you're pretty rare in ASEAN, let alone just in Singapore.
Yeah, actually, the thing that honestly surprised me was that this problem of, this paucity of early health tech investors is a global phenomenon. And unless you're sitting in Silicon Valley or, Boston, Cambridge area, you're going to find this to be the truth. I mean, we looked at the entire sector. We looked at as many databases and as reports as we could, in addition to with our own, eyes and walking with our own feet. We found that over 3/4 of all health tech deals are Series A or later, and this is a stark contrast to all other industries. So the question that kind of, struck us was how many great innovations are actually being lost because they can't find appropriate investors. And I mean, we've invested in companies in South Africa and Belarus, as well as, in US and Canada and Singapore as well. So, we've kind of looked at the whole world as our potential source of deals. And luckily we have good partners, and, we do regularly attend conferences, at least before COVID, that would really inundate us with deal flow.
Yeah. And what, at the moment, what is the size of your fund?
So right now we're still raising. So we're targeting a minimum of 10, and we have commitments for just over that. Although we've, because of COVID, there's been a lot of illiquidity. So we've been asked to wait a few months for hopefully our investors to come in. We expect that some of them will not at the end of the day. So that's why we're kind of back on the road and seeing if people are interested in what we're doing.
Yeah. And with that, okay, so with your sort of mandate, at what stage are you typically looking to go into companies?
We like to go in at the seed stage, and I know this means different things for different people across different geographies. So typically we like to go in with the first round of angels or just after that first round of angels. And if we want to attach a number to it, it's typically a below 5 million USD pre-money valuation.
Yeah. And are you exclusively going in deals which are led by other investors, or are you also leading investments as well?
So out of the 9 that we've made to date, we've led 7 of them. By no means do we want to lead all of them or even lead this many. But, if we see a good deal and no one wants to lead, well, by default, we have to lead.
And how do you typically source your deal flow?
About
what have you found to be your best sources?
The best source, which is about 15% of our pipeline, is coming from other founders. Other founders we've worked with, other founders that we've invested in either in the fund or in my personal investments, by far the highest quality. I'd say about 1/4 of our pipeline is coming from conferences and 75% is coming from referrals. It's probably not fair of me to say this, but it is the absolute truth amongst most investors, is that cold calls generally are very difficult to address, especially, if you're being inundated with, 20 to 30 deals a week.
Mate, there's nothing like getting a cold email on LinkedIn with a pitch deck attached saying, "Come check out my opportunity," to make you not interested.
Well, I think one of the challenges is a lot of people who are doing cold calls are spraying and praying. Whereas if it's targeted, well-researched email, generally we will have a look at things. And I do it that about 3% of these end up in our pipeline. But as of today, we haven't made any investments in anything that's come in cold. And it could just be a function of time and numbers, and maybe one day we will, but this is the case today.
So you like to go in sort of at the seed stage, and you're looking for a valuation under US sort of 5 mil as a starting point. What are the key elements that you're looking for in a company at that stage?
Well, at that stage, they're probably not going to have too much. Let's be honest. If it's software, I would expect there's some sort of minimal viable product and user traction, even if it's not paid. But at least have something to tell us something interesting about your platform and how it's different from the others and why it might be the platform to dominate all. We understand that it's a bit more difficult, and it's actually a bit more of a lottery with software, I feel, than it is for hardware. In hardware, we don't like scientific risk, but if the science is solid and it's a matter of just productization, regulatory, and commercialization risk, then that's okay. That's fine. But the number one most important thing of any of these is the team, because your company is early. So we want to understand who are the cast of characters, what are your values, your motivations, why are you doing this, and do you have the requisite expertise and experience across technical, business, and clinical areas to really give this idea of yours a real shot of making it. And because you're so early, you can pivot. So if it's a smart, capable team and it turns out that idea number one doesn't work, well, idea number two might not either. And hopefully you still have enough money for idea number three, and then maybe that's the one that works.
Have you found that there's more and more, and I've seen this sort of in Australia, and I'm curious about the ASEAN region. Have you found there's more and more investors that were previously, let's call it sort of pharmaceutical type investors or life science, more sort of now moving into this area, into the health tech area or the med tech area, just simply for the fact that the pathway to revenue is a lot less shorter. The global potential is still there, and also the approval process is significantly easier than what it would be for a drug company.
Yeah, it's an interesting question. I've seen a few dabbling, but I wouldn't say it's a wholehearted move, because when you're a life sciences, like hardcore pharma investor, that usually comes with it a little bit of baggage. And by this baggage, I mean, 2 decades or 3 decades in the pharmaceutical sector or investing in pharmaceuticals. And there's a certain calculus, a certain mental model that you've kind of ingrained into your skull, which you've got to overcome. What I do see, however, are people who are in the more traditional brick and mortar healthcare services and healthcare infrastructure starting to get quite interested in the health tech space, because it is exactly the digitization of these hard assets that would offer potentially massive increase in EBITDA across these assets, and as well as efficiency gains when you start working off the same standard across your disparate physical assets.
Gotcha.
If that makes sense.
Yeah, it does. And I suppose following on from that, obviously that sounds like the sort of technology sort of infrastructure sort of going for. What do you see as the key at a sort of macro perspective in the sort of health tech space? What do you see, let's call it your top 3 trends that you're sort of observing?
Yeah. So, I mean, it's unfortunate that it took a global pandemic to create realization in most people that the way we do healthcare perhaps isn't the best way to do it. And this, telemedicine push that we've been waiting for 20 or 30 years, finally actually happening. I think that if you're an early investor and you're trying to go after this, telemedicine platform or e-prescription platform, which is what dominated most of the headlines, I think you're too late. I think the second order question you now need to ask is, how do we make these better and more efficient? How do we support these, and how do we make sure they stay permanent? So it's really trends around enhancing the telemetry that you get off of these platforms. Because right now, your face-to-face teleconsult with your doctor is a glorified Skype call.
Yes.
That's what it is. And your doctor is basically restricted to asking you questions
yeah.
taking, clinical grade telemetry from your home. So the idea of inexpensive, ubiquitous sensors that collect clinical grade information, be it, at one time or continuously, I think will be quite important. And, I have to say a lot of our investment focus in the device space has been exactly in this area, looking at clinical grade lung sounds or heart sounds, looking at continuous measurement of biomarkers, and we're always on the lookout for things that can be clinically relevant, inexpensive, lightweight, and continuous. That's one of the big things. The other one is around financing models and data. I mean, how is this all going to fit together now that you have this broader ecosystem coming into play? The onus is going to be on these new solutions to demonstrate that they are generating financial value and that they ought to be reimbursed. Because the one thing is consumers don't like to pay things, especially in in countries where the government is footing most of the bill, or in places where the consumer simply can't afford it.
Yep.
Someone else has to pay for it, but how do you demonstrate that value? And technologies or platforms or methodologies that demonstrate that value, I think will be more and more important.
And what have been some of the companies that you've invested into that are, I suppose, are solving those problems? Like you mentioned about sort of delivery. I saw there was a last mile logistics company as one of them, but keen to sort of get some profile of some of the companies you invested into that are solving those challenges.
Yeah, absolutely. Well, I don't know if the Zoom will preserve this, but here we go. So this is an inexpensive digital stethoscope that can diagnose with mid-90s accuracy 5 different lung diseases at a very early stage. One of these lung diseases is pneumonia, which is the leading killer of children under the age of 6 in the whole world. And yeah, COVID.
Yeah.
So this is one example. We found the company in Minsk, Belarus. We moved them to Estonia for governance reasons, as well as to, open access to the EU market. And, they've been doing a great job so far, and they're just in the middle of their clinical trials. They have a lot of patients to choose from these days, unfortunately.
Yeah.
And hopefully they'll be on the market actually this summer in their local country and have their CE by the end of the year. Another one is, a continuous thermometer, right? And it's a clinical grade continuous thermometer. So if you're looking at people in quarantine or in what's it called, negative pressure rooms, in order to go check their temperature in a normal day, you have to change into your PPEs. You have to go in, spend some time there, go out, change out of your PPEs. And that costs a lot of time and money in order to do this. So if you can just monitor this remotely, the thing's the size of a postage stamp, which is pretty cool, and it lasts 2 days or so. So these are 2 device examples.
Yeah. But I like them as examples because it doesn't, like, they're products that don't seem to change, that don't have to have a change in the way in which people do things for them to be executed or for them to be implemented.
Yeah. And a lot of things actually, you bring up a really good point because, I have a lot of doctors as friends, and I've worked with them throughout my entire career. They're pretty stubborn, and they don't like to learn new things.
Creatures of habits.
Yeah, because they've trained in a certain way for decades. They've been doing. They're used to seeing things in a certain way, and now they're busier than ever. So to take a new piece of hardware that has absolutely no anchor, no familiarity to them, it's going to be a big ask. So the things we look for are basically smart versions of old dumb pieces of hardware that are familiar to the practitioner. And then what it does is it saves them time immediately from day one. It saves them time and hopefully saves them cost immediately from day one. The moment you ask a doctor to spend more time on something, that is already a huge barrier to adoption.
One of our sort of successful clients that we've watched over the last few years, now they're sort of in mode to go on list, is a company called 4DX or 4D Medical. I think they've sort of rebranded to, and effectively all they did was take the traditional X-ray machine, overlays, and I'm simplifying it obviously, but overlay software to it to actually get more of a 4-dimensional image in regards to lung capacity. But what I think is really cool about it is what you highlighted. By overlaying smart sort of technology onto things that people are already using, there's a layer of data there. And then with that layer of data also becomes a potential new revenue model. What are you seeing in the different new revenue models that are coming from these new products?
Data is key. Everything that we've ever invested in is throwing off mounds of data, or will throw off mounds of data the moment they hit the market. Because the challenge is right now, we're building the tools to allow for more efficient, more accessible, higher quality care, but the infrastructure around it is ill-suited. If you look at the key players in healthcare, insurers, pharma/med device companies, and health systems, they don't really speak to each other. And costs are going up. How are you going to actually prove the value of what you're trying to deliver or what you're trying to sell? And the answer to that is more and more data that shows the real world efficacy of whatever you're trying to do. If you're a pharma, justify why you're charging $400,000 for your gene therapy, or justify why you're charging $100,000 for your cancer medicine. Prove it. Does it actually work? And how does it work? When does it work? How does it improve, your endpoints, your quality of life, your, resource utilization? If you're a hospital, does your procedure actually, improve the quality of that patient's life? And are they better off than if they did something else? And how do you prove it? If you're an insurer,
or even the inaccuracy of some technologies, like which most people aren't aware of.
Exactly. And if you're an insurer, how do you reduce the claims that are coming into your, your submissions? Do you just raise premium prices and say, you know what, we're not going to bother with claims, managing the claims, or are they actually going to try to manage the medicine? And all of this requires a lot of data from a lot of different situations, from a lot of different people. And it's on us to try to generate a lot of that data.
Got you. Now, as a sort of final question, actually, I might ask two final. So what I love about what we do is I love seeing the future of what most people see 5 to 10 years from now. I love that I get to see it today. And I'm sure that's the exact same for you. In your world, 5 years from now, what do things look like from a health tech perspective? How are we living? How are we using technology to improve our life? How are we to extend life? How are we using it for care or for just prevention of disease? How do you see things?
Yeah, so there's, humans are really, really good at overestimating how much will change in a year and underestimating how much will change in 5 to 10 years.
Yeah.
I'll put out a bold prediction, and I'm sure I'll be wrong, but if you look at the burden of non-communicable diseases in our part of the world, it's over 3/4 of every
heart disease, cancer.
Yep, diabetes, hypertension, hyperlipidemia, all this stuff is 3/4 of the disease burden in our part of the world. And most of this is preventable.
Yeah.
Even with cancer, 2/3 of all cancers are preventable. So we need to really shift towards prevention. And what does that mean? It means continuous monitoring. Like, we know more about our cars than we do about our bodies. When you're driving your car, the check engine light goes on. Okay, I've got to do something, right? If we don't have those indicators in people. And I think, 5 to 10 years from now, we will. We'll have smart sensors. Our wearables are getting smarter and smarter and smarter. Yeah. It's only a matter of time before you have, say, 20 biomarkers being monitored simultaneously and enough contextual data to say, hey, it seems you're about to have a heart attack. Maybe do something about it.
Yeah.
And really, it's going to be the job of the hospitals to take care of really serious acute problems only. So, you've got a pole sticking in your chest, that's time to go to the hospital. If you're worried about, complications.
Stroke.
Yeah, exactly. Yep. If you have a stroke, sure. But hopefully your devices would have told you that.
Yeah, we've actually got a client that basically is they're now listed on the ASX. I believe they are. That's sort of in that area where it can detect the early onset of a stroke, which I find incredible. But I love that as a prediction.
Yeah. And it's only going to get better from here. So, the more that we can detect early, the more we can prevent, and the longer and healthier lives that people will be living without having a lot of serious life sciences interventions. I think, life sciences is really going to be pushing more and more into life extension, regenerative medicine, advanced gene therapies, oncology, and then rapid response to new pathogens.
Interesting. So if you're in you saying that, the indication aspect from technology and what it can do for potential illnesses, then obviously there's an infrastructure aspect to that as well. And there's also that reliance on, okay, if there is that sort of indication there's going to be a potential, where does that information go? How does that get used? I think that would be another question which sort of comes up in that sort of building of the future.
Yeah, and I think it depends on your government.
Yeah.
Because, all health systems are pathway dependent.
Yeah.
And if government is very much on the side of personal data protection and privacy, like you see in Germany, then, your health record will belong to you. You'll take it with you in whatever form they'll decide, be it a smart card on your phone or a secure, highly encrypted cloud-based server, but in such a way that no one else can access it, versus other places that are a bit more communal in nature and believe that your health data belongs to the state, which will also have its benefits, but also potential drawbacks.
Interesting. All right. Well, so Joe, mate, thank you so much for your time. I really appreciate it. Now, if people want to get more information about your fund, obviously we do have information on the Wholesale Investor and Crisp site. You can see the brand Verge HealthTech Fund. Is there anything else you'd like to mention sort of before we finish?
Well, there's never been a time like the present to start looking at health tech. I mean, we are now at 11.5 million cases and counting, and there is a new normal that's coming. It is inevitable. Yeah. So what better time to start looking into this space seriously?
Completely agree. And I also agree with your philosophy of the prevention aspect rather than the sort of indication once it's there. As far as if you've got that capacity, utilizing technology to understand where your body is at or, sort of different potential health risks, I love that as a vision for the future.
Cool. Well, thanks so much, Steve, for having me. And it's been an absolute pleasure.
Thanks, Joseph.